Hello, Oracles. How is it going today? My goodness, we got our credit rating upgrade. This has been awesome. Alexandra should be on very shortly. She's just making her tea. Actually, I should have made my tea as well, but that's okay. Tea time with Alexandra would have been awesome. We'll do that in the future. So when she comes on here, if you guys want to bring up your questions, whatever you guys have for us to discuss, feel free to throw them out there. I've got a few of my own that I definitely want to ask her to address. Just some of the things that are coming up, some of the things that you guys have already asked me previously early today, and then from there we will ask her whatever questions you guys have. But this is going to be very exciting. So just waiting for her. I'll have to find out what kind of tea she is drinking. What do you guys think? What kind of tea do you think she is drinking today? And just looking at the stock today. So one of the questions I am going to ask is, the fact that we've all been looking for this to be a big catalyst for the stock. And obviously, as we saw today, it did absolutely nothing for the stock. So that will be one of the big questions that I do ask her. Let me see here. I'm trying to go through. So I'm going through my Twitter thread and all this stuff. Oh, here she is.
In a sense. Hi, Jim.
The woman of the hour.
Can you hear me? I'm sorry I'm late.
That's okay. I've got an echo on your end, I think.
Oh, that's what I thought. So let me try to put those stupid earplugs back in. Just a second. So I need to go back into settings. Am I already in the show? Of course.
Oh, of course you are, but that's fine. Sure, but that's fine.
Now let me see whether I can find these earplugs. Chook. Galaxy. Are they connected? Let me check.
Check. Oh, no echo. I think we're good.
No echo anymore? Are you good?
Yes, we are good to go.
Okay, now they have to stick in there, but that's just it.
So first off, awesome job. Thank you so much for all of the work that you have done. And as you had said yourself, obviously it was Tesla who did it and made it happen, but the fact that you educated the community and really brought this to light has been awesome. So thank you so much for that.
Well, thank you for telling me. Honestly, I think I did my part, but I think that's it. These speakers gonna be something. I think I did my part, but I think it was actually I had to do my part, right? If you've lived through rating agencies, I would have been stupid not to open my big mouth then. And yes, it was a lot of work, but it was work that I wanted to do anyway. Nobody told me do this, whatever. So I thoroughly enjoyed it, and I thoroughly enjoyed that we shammed them into it, if I may say. But it was overdue, and the real work is Tesla who did it, right? Tesla wouldn't operate the way it's operating. There is nothing we could say about it. It's them doing the brilliant results. It's them having no debt. It's them doing everything the right way. So I just had to shine light on it. That's all it is. And I could have never done it without this community. Hundreds and thousands of people have been retweeting my stuff. I've made sure, to comment and shame them into it. I had a lot of people helping me set up these letters and helping me correct them, help them straighten them out. So I'm the face, but there are so many others behind me.
Oh yeah, and it's so true. And it's like, you did what you felt was the right thing to do, and you got the support for it. That's really what it was. And we all agree that was the right thing to do. Was still, we've got to find the truth. We've got to make this correct. And you did it. So that's awesome. First biggest question of the day is, what kind of tea are you drinking?
What kind of tea? Well, it's green tea, and I'm not drinking it yet because it was not ready. But here we are. I'm doing it now.
It was funny because I thought about making tea myself, and I was like, oh man. And then you said you were making tea. I'm like, it's too late for me to make it.
Wait just a second. I have to stop this test because it's playing me this test music all the time. Oh my God, and Chris is going to Partage tomorrow. Oh my God, tell Nicolas that I sent you. That is funny. So, I annoy you all with my restaurant pictures because, other than Tesla, I also love to eat. And I'm so pleased if some people are going there. There we go. But just, so what was your first question? The green tea. Yes. So this is green tea from Japan. I'm very fond of it, and it's ready now. And As soon
Excellent.
as it's a little bit cool, I will drink it. But I
Very
need it
nice.
because my voice, I've been screaming all morning. First I was screaming all by myself. Then I was screaming in the camera. I was screaming with my husband, with my kids. And there we are.
That is awesome. Yes, you definitely deserve all the excitement. So a big question then is, normally, and Gary Black had mentioned this on Twitter today as well, normally when we get the credit rating upgrades, it comes after an earnings because we'll see the numbers that come out. So having it come out before Q3 earnings is a bit strange. So do they see the numbers ahead of time?
This is the weirdest thing. Yeah, this is the weirdest thing. So I mean, we can only speculate, and I don't want to go too much into the rabbit hole because from the first step, it's just speculation, right? There is absolutely no indicator. Using production was, let's face it, the only good news of the last couple of weeks, right? Deliveries was not a good news. This Twitter drama is getting more dramatic by the minute, right? Yeah. Is it in? Is it out? Is it expensive? Is it not expensive? I mean, you have no clue. And you just feel like this is unexpectedly soon. And even more, I just had 2 seconds to read for the first time, read the text from top to bottom, unexpectedly enthusiastic. Right? Somebody who was like, oh, okay, maybe this company will come around and maybe this company will do half of what they're promising. And well, let's wait and see, is now suddenly, okay, we're all wrong. We said 10, it's 20. We said 5, it became 12 and whatever. You're like, wow. So either they have, I don't even know whether you say that in English, smoked the peace pipe. Do you say that? We say that in German and in French, meaning, when you have the Indians sitting around the fire pit. And so either that, maybe there's something going on, right? There's a relationship now between Tesla and S&P, and this is it. But then I calm my enthusiasm and say, well, if that would be the case, they wouldn't have now gone for triple B, setting the expectations that, well, we need now at least a year more of good data to go somewhere else, if they already know that there is a bond issuance or something in the pipeline. Or this is just, white flag, we're giving up, we've been tough on Tesla, we realized we did 2 or 3 mistakes, which they did. I mean, inclusion in the S&P 500 in December 2020 was late. The ESG index this May was hilariously wrong. I mean, it was ridiculous. Exactly. And so maybe this is the way of showing good faith too early, too enthusiastically, but we'll take it, right? Now, why did it not move the stock? I think it just didn't. Well, the stock was not in good shape this morning. I think at least it stabilized. So it's not as if this was good news or not. I mean, it went up to 243 at one moment and then came back down after the news. But I do believe it will fundamentally change the tone. There will be a moderator.
Yeah, sorry, Karav, I don't even know how to do it on here. I'll have to figure that out later. So I apologize for the bots, folks.
Oh, I see you got the WhatsApps.
Oh, yeah. They're getting bad.
So anyway, so why did it not move the stock? I just think there is so much other stuff at the moment going on for this to move the stock in today or in the next couple of days. But it will completely change the tone of institutional investors. You will replace day traders with people who hold, right? In the same way that we had it for the S&P 500, but stretched over time. So this is not a one-day event where something happens and the next day it's done. This is going to take, I always said, around 6 months. Some people go up to 12 months. Maybe it's already done in 3 months, but this will now trigger true purchases for portfolios that will keep it up to eternity, right? And that is the good news, because the thing is, it really changes the way institutionals, and I'm talking about medium-sized, large funds, but not the hyper large funds who never depended on the rating agencies, nor and foundations. And I always said the CFAs of this world, right, who manage monies of other people and have this in the main, that there are so many people that use these damn ratings still. I mean, if I could really change the world, what I would like is that there are no rating agencies anymore, because I think it's just a sheepish behavior to hide between letters that somebody in some office decides to put on, and we've now all witnessed what a sham it is. But since it's still there, well, may at least get to where we will be treated fairly. And now that's the case. From now on, we will be treated fairly.
Yeah, and that's one of the things too that drives me crazy is like they've really literally created a system where they can make money just because they can control things, and it doesn't make sense. It's not right. And
it's a bottleneck. It is what it is. Yeah.
Yeah,
and
that brings up.
ESG is actually much worse. Yeah.
Oh yeah, and I know we're going to dive into that one at some point in the future with you as well. So now looking at that, and that was one of the questions that we had, because obviously we were all looking at this being a nice big catalyst coming for the stock, and clearly we got the information and the stock did nothing. And so that was one of the questions we had, and you just answered it, which is, it could take months for this to plan out, in the whole deal of all of this. But as you said, in the long term, this is fantastic because of the fact that it's going to bring down the volatility of the stock. Now, when it comes to the difference between S&P and Moody's, is this something why Elon had said that it's irrelevant with Moody's? Because now that we are with S&P, does it even matter? Now that we have a split rating, is that going to matter, or is it going to move even more when Moody's upgrades too?
I mean, first of all, latest in 4 months, Moody's will have pulled up. Moody's is not going to stay there. The Moody's analyst, René Lipsch, remember that video that they did at that Bloomberg venue in June? He is not a strong guy. He is a follower. And Nishit, well, he's certainly not my preferred analyst, but he has a much more clearly articulated opinion. And today's piece is so optimistic that Moody's looks even more ridiculous now, right? I was actually contemplating myself sending them an email, and then I said, "Oh, don't go there, don't go there. Sleep a night over it." But I mean, I'm dying to do it. Like my fingers want to do it by themselves. I'm like, no, not so quick. But the thing always was my timing was we have financials on the 19th. Between the 19th and the 21st, we'll get the S&P update, which would have been so normal because exactly the same thing than last year. So the surprise is it came 2 weeks early, and then a quarter more for Moody's to think and assemble their thoughts, right? They would do it after the Q4 results end of January. Now, obviously, suddenly we have this window, though they did it earlier. Maybe now Moody's thinks, well, we have to move in 2 weeks once the financials are out, still trying to hide behind the financials and then just trying to find a stupid hook in those financials that, oh, now we're reassured and we have a bot now. We have diversification, see? And then writing a nice press release and getting it over. I do believe latest January, Moody's will have its rating. So this split situation will be very short-lived. And as I explained, it will take these funds anyway 3 to 6 months. So in that time window, Moody's will have adjusted. So I'm not worried about the split rating at all.
Okay. All right. That's good to know. And, and you and I, we had the same mindset. I was thinking it was going to be on my birthday, November 8th, that we were going to get the S&P. So we pushed it up a month. I'm totally okay with that. And, going back to that.
I should write him, dear René, now that S&P has done it, wait for Tim's birthday. And on November 8th, please. Right? And then we're awesome. All happy.
Best birthday present ever. And my birthday's on election day, which is also a full moon. It's going to be a crazy day that day.
There you go.
And so going back to that interview that they had with Moody's and S&P, and they both basically had the same caveats as the reason why they were not going to upgrade. They were waiting for just more consistent financials, not to say that they were bad, and then they were waiting for a stronger product lineup that was coming out. So obviously, that was why the big surprise today with S&P, because we didn't get either of those. Like the bot, I wouldn't even count the bot.
Moody's was the one. Moody's was the one with the quantitative more products, right? We haven't seen Moody's yet. I don't know how they will publish it because they went much more into the ridiculous corner. So getting out of the ridiculous corner is obviously much more difficult. S&P was a little bit more consistent in the fact that they said, well, we're watching them closely, and when it gets better, it will be deserved. But I mean, let's face it, just because production was higher, which was completely to be anticipated. I mean, if there's one thing that everybody agreed on was that production number, right? That wasn't the miracle. What was the letdown was the deliveries, right? For whatever reason. But the production number, they could have done that 3 months ago because that production number was in the pipeline with Shanghai changing the rhythm and everything. You could have just,
Right. I mean, I'm sure
calculated it and whatever. There was no news for it.
exactly the production number came in basically in line with what everybody else thought it was going to be.
Exactly.
So definitely a shocker. Obviously not a complaint on the shocker, but my goodness, it was definitely a shocker. So now with all of this, do you think that we are going to see a buyback coming sooner than later?
Well, that's a good question, because for the buyback, I would have hoped. I mean, the buyback can be done in two ways. Either they just do it straight out, use excess cash they have, and purchase back stock at 240. I think that's a perfect price to purchase back stock and then retire that stock, right? But that means that some of the cash they currently have available, I mean, they would not use anything they need for operating expenses, but some of the cash they have available would be used to do that. So my second solution was that they would issue a bond of 2 years or longer. Currently, it gets expensive because fixed interest rates are rising, but the credit spread is obviously now smaller because they're investment grade, and use the proceeds of that bond issuance to use that cash exactly to purchase the stock back for the same amount. That's the Apple model of 2013 that has been carrying out for the last 9 years. Whatever is outstanding, that for Apple is actually stock buyback. And that's gaming the system, right? I mean, it's paying the rating agencies. That's a disadvantage, but it is exactly what the whole system is built for. And do I think Elon likes gaming the system? I'm not sure. But on the other hand, it gives them the advantage of not spending any cash that they don't have, being able to now get it out of the market at a very competitive rate, and currently buying the stock at a fairly low price. So if they want to do it, this is the perfect moment to do it. Yes.
Oh yeah. And now, of course, I'm sure a lot of people are going to ask, do you think the stock and with the whole macro environment, do you think it's going to come down further and maybe a Q4 buy would be even better for them?
I mean, I don't have a crystal ball. Yeah, it's funny. I always have a crystal ball on my desk because I always show it to my clients. So you see that it's always sitting there because, I do immigration and people go like, will I get the green card? Will I get the green card? I said, okay, let me ask my crystal ball. And then obviously my crystal ball never says anything. And the same way, I have no clue what macro will do, right? I honestly think the Fed is crazy doing what they're doing, and they're driving this economy right into the wall. But they don't seem to think that. I mean, if you listen to them the last 2-3 days, you're like, are we on the same planet? Do you not see it? I mean, I understand that housing has gone up a lot and becomes very difficult to afford for first-time buyers and all that. I understand lots of issues that dragged out during this pandemic and the supply chain crisis, but will higher rates solve them all? I really have my doubts, yet they come with a lot of inconveniences. So I don't know what macro will do. And I do believe if there's one company that will get through these macro issues better than anybody else, I do believe it is Tesla. And I do believe the beta will reduce. We had a beta of 1.6 so far. I do believe that's going to go to 1.3, 1.2 very quickly. So the pain will be lesser, right? The pain will be lesser. Yet I do believe the upside is still as high. It's really funny with beta. You always say, okay, fair enough, I give up volatility, but I also give up future gain. I don't think we're giving up future gain. I do believe once Tesla pulls up, it will really pull up significantly again.
Okay, no, that's good to know. So we're going to go from a roller coaster ride to it's a small world. That's awesome because I know that's
not so quick.
And I know like a lot of my subscribers are newer investors. So, people who have been holding the stock for a long time, they're used to the volatility when it comes to Tesla.
Mhm.
Somebody newer to the stock, especially in the environment we're in right now, like it's very disheartening for a lot of people out there. So
It is.
I try my best to just ensure people, like long term, look long term. These are the times you want to buy. Like these are the great times to invest. And it's just,
it is.
the
And I mean, it's
volatility
also, and I tweeted about that a couple of days ago. Don't go into margin now. If you can reduce margin, if you're in it and you can reduce it at a convenient price because it's uptaking or whatever, do it. Don't stay in margin at these moments. I would still wait a couple of months early spring next year to build up margin again. Those that do options, well, rather do long ones or do combinations of options, so you have some leverage, but you also have some protection. So I just, and if you don't feel comfortable with all that, if that is all for you casino, you like to do it, but it's really just gambling, well, don't gamble, go into the stock at the moment. I mean, the stock won't go much lower, I don't think so, and you still have the whole upside.
Yeah, yeah, and oh, here we go. Thank you, Jeffrey, for this. And yes, oh my gosh, you and your mood when you came out with that video, that made everybody's day. That was awesome. Oh my goodness.
I mean, I was so happy, I can't tell you.
You're like, oh my God, we did it! Yes. Oh, that was great. Yeah, so I mean, and looking at next year, and that's one of the things that I try to reiterate to people is, looking historically when it comes to the Fed, and when we come out of the times like we're in right now, when the Fed does decide that they're going to come down on rates, that usually signals another bull market coming out. So, I'm not one to get into margin, and I'm not going to give any financial advice, but if I was going to look historically, that to me would be the time to start getting back into it if that's something that you wanted to do.
Yeah, and I would wait still a little bit. I just think at the moment there's so much uncertainty. I mean, this Twitter story will be over soon. When people tell me, it's all Twitter, it's all Twitter. No, I don't think it's all Twitter. We have to get through this. We'll see what happens. This is not going to be long. End of October, this will be over.
Yeah.
And then we can go back to fundamentals. I mean, can you imagine AI Day was Friday? This is 5 days ago. It feels like 5 months ago.
No kidding. Like, it hasn't even been a week. This is nuts. Yeah, and it's, oh man, this is crazy. And I know I was having a conversation with one of my subscribers earlier today about the same thing. This whole pullback that we've had right now, I don't think it's Twitter related. I mean, it's most likely deliveries related, and the concern about demand over in China, if that really is a concern. So, and looking at it, the Twitter thing is not really a fundamental issue. The demand could potentially be a fundamental issue if that truly is a problem over there. Do you think it really is a problem?
Well, yeah, and I can only tell you my personal experience yesterday. So yesterday evening, I'm a patron of Toys, so we got more information than what he published, but I'll address the part that he published. So I read the whole analysis, and I was going, oh my God, he really thinks this is having a major impact on China. And how will they solve it, right? And so I went to bed last night quite worried. I was really not in a happy place for the Tesla half of my brain. And I started thinking it through, and I said to myself, look, it's October 5th. I know it's 6th today, but yesterday evening was the 5th. We've got still the whole quarter there. I mean, not a second do I believe that the people at Tesla are sitting in their headquarters and thinking, okay, we just let China demand dry out to half or whatever he expects. Or I don't want to give away his numbers, but whatever he expects, and not do anything about it. I mean, they're the most smart strategists out there. I'm not saying Tesla is never making a mistakes, but they're making very few mistakes. So that gave me some comfort. But I mean, I wasn't yet in a happy place. I just thought this whole China thing is not, I don't understand it yet. I don't understand the solutions yet. I wasn't. And then came this upgrade based on production numbers. And I was like, are we living in a parallel universe, right? One time I start worrying about it, then the guys that I really don't like come back and tell me the contrary. It was just absolutely crazy. So I still haven't found a solution on China, but the one thing I'm convinced about is Tesla will find a solution. Those cars, Hertz wants to buy 100,000 cars. Yesterday, they published that one of those German rental car agencies wanted to buy 100,000 BYDs. If China-produced cars will all have to be exported, there are buyers for it. I had that discussion with Gary and Ross, and Gary said famously, do your math, Alexandra. And so Alexandra did her math, and he was like, yeah, you can maybe sell 20,000 or 50,000. No, you can sell 100,000 supplementary Teslas, because there are buyers out there. There are rental cars and fleets out there that are desperately waiting for cars. So if you contact beginning of October all these fleets and say, look, we will have cars available, Shanghai production, which currently is best quality of all, do you want them? They will take them in the third quarter. So I'm not as negative as Troy, but I do believe it will be a challenging quarter, and not so sure we will see those 495,000 that Reuters told us about. That seems really a big challenge.
Yeah, I was looking at, because I think originally Berlin was supposed to start its third shift in October, and I believe it got pushed to December. So I don't know if it's a hiring issue that they're having or just other delays, whatever it is. Berlin's just been full of delays all along, but it's coming. So to me, it's not a big concern.
Austin too. I mean, I found the Austin ramp slower than I expected. I don't want to sound too alarmist because there's no reason to be, but I mean, being German, I was always sure Austin would ramp up quicker than Berlin, right? Just because I know them, right? And now suddenly it seems like Berlin is actually ramping up quicker than Austin, which is surprising.
Yeah, and part of me wonders, like, is there something else that they're working on? I know it's a different format and layout than Shanghai. Is this just, I'm sure we'll find out in the future. And to me, again, it's not a concern, but just one of those things to think about. And then thinking about, like, when it comes to China, they have so many more markets over there in the Asia Pacific region that they can ship to. So somebody else had also mentioned that, maybe they're not delivering in China, but they have plenty of other places to deliver to. And then when we come out with a compact car, obviously that compact car is going to take demand and skyrocket it as well.
In medium term, I have zero worries. In the very short term, obviously, there are a couple of strategic decisions. If in the Asian regions you suddenly deliver Japan or Australia, well, you have to have right side drive, right? So the whole construction mode is a different one. So you have to early on plan where you want to ship them. You ship them to Korea, it's a different way. You ship them to Europe, it's a different way. So there are a couple of specifics that you have to decide. You also have to book the ships. I mean, these ships I think there are 7,000 cars on a ship now. I mean, it's just so enormous. So there have to be so many logistics. But I mean, come on, that's their daily bread. The one thing I didn't appreciate was in that press release with the deliveries that they pretended they had logistic problems. I don't believe that. It was actually funny, that famous Thursday before the last day of the month, we drove back from Vegas. We saw 10 trailers with cars. Never, I mean, I'm sitting on the 101. The 101 is just a couple of streets down from where I live. I'm following them all the time. I've never seen 10 trailers the same day going down the 101, right? So I just don't believe this logistic story. What I do believe is they had an issue in China, and that caused a logistic issue in, okay, we don't sell them to China at that high price, so where do we ship them? And that was too late to really get to ports to get to delivery points.
Yeah, and that's what makes me wonder. And, some people are thinking, if that is true and they were just logistical things, that means we're going to have a huge jump start to Q4 because, hey, all of a sudden these ships are going to land. And just because it didn't land on September 30th, now it's October 1st.
Well, yeah, we have these 20,000 more. I give you the 20,000. Now, the question is, China was supposed to sell 150,000 to China this year. So what happens to these 150,000? That's the big question. The other question is, what happens to the United States? Will we see the same phenomenon in this? We talked about this last time. You said, I'm not sure I take my Y because of the 7,500, right? Because rather wait to January. So if we have in the two biggest markets, United States and China, delays because people they wait for reductions or wait for the tax release, where do they put all these cars, right? I mean, again, I think there are countries where they can do that, but it's just going to be more of a puzzle of which car goes where and how quickly do we get them. I'm not pessimistic about it, but I don't expect the same exceptional fourth quarter that we were dreaming about. I mean, that 495,000 car number made a lot of sense 10 days ago. And makes much less sense today. I just want to say that, and I'm saying that so that people listen to me saying, don't go too much into options, don't go too much into margins. There will be still some choppy news around until the year end. All this will be out of the way. The US will have the tax credit. The Chinese will have found a modus operandum so that they have people queuing up for deliveries again, and off we are.
Yeah, and like you said with the Hertz, there's plenty of fleets out there. So even here in the US, yes. Hertz is still looking for a significant number of vehicles. So Tesla can just focus on fleets because these fleets aren't going to be able to get that tax credit.
That was exactly my question. I have no idea, and I wanted to research that. And then this morning, obviously, other things happened. Don't they have a tax credit for the commercial fleets starting on the 1st of January as well?
You know what?
I
I'm gonna have to look at that. I know
no.
the semi did, but I don't know about
Yeah, there
fleet.
was that 40,000.
Hmm.
Yeah,
If you guys,
but I
in the
had the
comments
feeling there
know,
was
please let
something in
us.
there.
Yeah, if you guys in the comments know, please let us know. I
Yeah,
actually don't know about the commercial fleets because that obviously would be significant. Any commercial fleet would obviously want
yeah,
to take any savings they could get because that'd be big.
and
But I
obviously they
mean,
would wait.
oh yeah,
They would wait
and
for
to me,
that.
so that means that, and again, just looking at how things play out, we get a slower Q4 than a lot of us expected. So we're going to get potentially some disappointment coming out at the end of the year because we
Hmm,
didn't hit that 1.4, we didn't hit the 50%. But my mentality is that's fine because it's more delayed demand than not having the demand. It's just people are looking to get that savings,
exactly.
especially if we're going to recessionary times. You're going to want to save any money that you possibly can. So we may end up seeing a very explosive Q1 of next year. And next year,
Exactly.
between Cybertruck coming out,
Exactly. And that
inflation.
brings me
Yep, go ahead.
exactly. And that brings me back to the buyback. So management knows this much better than us, right? We're speculating here. Maybe this is no problem at all, and they'll get to their 450, 490, 500,000, or they already know it's not going to be the case. If they know it's not going to be the case, what would you do? Would you do a buyback out of your cash, or would you do a buyback out of a bond issuance? I mean, for me, clearly you would do it out of a bond issuance. You're not going to spend your cash if you don't know that you're selling as many cars as you had hoped for, right? And then would you do a buyback today at 240, or would you think, well, maybe the stock goes a bit lower because these news are going to be not so encouraging, so let's wait for, I don't know, 220 or I don't know what, and then do it then. So those are things we obviously don't have the answer for it, but that's my medium scenario. I always have a bullish scenario, thinking everything is perfect as of tomorrow, and I'm always catastrophic. But that's my medium scenario, and probably the most realistic one. That they are working with S&P on something. Not sure whether yet they will do it or not, but at least in discussions. That's why it's out now, so that they have the time over 2.5 months to build this up.
Yeah, and
Because they could do a bond, issuance on triple B. They would have a good rate. But I do believe there's more to come.
so now going up with credit ratings from here, because obviously we're always already investment grade now. So going up, does it make a big difference as they go up in investment grade rating to higher ratings?
Yeah, I mean, this was the most important, no doubt. The
Right.
gate's open now. Okay, so your investment grade, you're on the list. You've ticked that box. So all those people that so far were hesitant now suddenly have their check mark to be able to get it. Is it already the blue chip check mark? I think yes, and credit default swap rates say yes. But I mean, there may be people still going, oh, I want an A rather than a triple B or whatever. But that is, we're getting into smaller territory. But any upgrade will be good news, nevertheless, right? And so that depends really now on financials. I don't think we're anymore in this territory that they're searching for any stupid excuses. This is now next financials, look at ratios, improving, upgrade.
Yeah, and looking forward, as they go up, how long did it take Apple to get from,
They
junk?
got it immediately with the first bond issuance.
Okay. And then how long did it take them to go? So to get to top credit rating, wasn't that 2018, 2019 that they got pushed up?
I think they were straight away AAA, or they were straight
Oh,
away
wait, okay.
AA, and then they got an upgrade. I have to look it up, but it wasn't straight away
Okay.
in the A's, that's for sure.
Okay.
Yeah.
All right. So now looking forward, do you think we see another split coming up in the next few years?
Not a 3-for-1 ML, I hope. I mean, that was
I remember we
a
talked about it
blurb
last time
in
and
history.
they screwed it all up. Now it's not good math.
I just don't like it. I don't like it because now we have this 15 number to deal with. I mean, maybe not everybody here had stock pre first split, right? But I mean, for the ones of us that had, we still have this 15 multiplier now to deal with. But I also think this was just, we came from a zone. You all remember when we were in the 600s and 650s, how we were all crying, right? And then we went up to the 900s, and then we split and we were 300. now we're down to 240, and it feels actually worse than when we were at 600, right? I feel today at 240 less. I'm very happy with Tesla, don't get me wrong, but I feel less well treated than we were at 650. 650, I was so confident of purchasing because I just felt this was ridiculous. That nobody understands Tesla. We get it and we buy. Now I feel a little bit more hammered. But what I didn't like about this stock split was it was sort of unnecessary. It didn't obviously have any impact, which we said. Remember when we had the last one, we said we don't expect anything to happen from this stock split. We had all these expectations how suddenly now options became more liquid. Well, they did, but it's actually the put options that are more liquid than anything, right? So it's like, oh, do we really want to do that? And did it really bring smaller retail investors to the market? Well, if they started buying Tesla at 300 and today are 240, I hope they have lots of confidence. But if you're a first-time Tesla investor and that was your first experience, straight away going down 20%, that's probably not very encouraging. So I didn't like this split. I hope they're waiting for well above 1,000 next time, and that it's sort of in a calmer waters environment. But is there ever calmer waters for Tesla? That's the big question.
Right. Well, hopefully now with the investment grade upgrading, now if we come down to a beta of 1.3, hopefully that would be some calmer waters.
Yeah, that would be wonderful. That's true.
So now if they issue a buyback, how much would that move the stock? Obviously it depends on how much they're doing a buyback, but usually
and at what price, right?
Yeah.
Well, it does, of course, because first of all, it signals very clearly confidence of the issuer, because if you start to purchase back stock to retire, you just give everybody else a bigger slice of the cake, and you signal how confident you are that the stock goes higher. So your single share has more value because you have less competition of shares around you, right? And you also have this perception. If on top of it, and the market gets it, what the whole financial spiel behind it is, you borrow money and you use that to purchase back the stock. It's something the market appreciates because you're playing the game, right? You are now somebody established that plays with their rules. So I do believe that could be a good catalyst. Now, will Tesla recuperate from current level in the next 6 months to much higher levels without a stock buyback? Of course. The stock buyback is something technical, financial, that has a little impact on all of us. But that's not what Tesla is about. Tesla is about building the most brilliant cars, now the best energy resources, soon the best bots of this world, right? So is it about financial engineering? No, it's not. It's a nice thing to have, and I think it will help us all to dry out this float, get rid of the last Tesla queues, and just have a better trajectory of the stock again.
Finally,
Tesla queues, I don't know you, but on my Twitter feed, my gosh, they're like, I'm blocking now. I'm just throwing them out.
Oh yeah. So for me, and actually I was talking to Lee over at Tesla Economist about this, and like, we have been bombarded by so much more negativity and FUD on our channels. It's absurd. And I saw it before back in the spring when we saw like this, basically same as now, this whole peak fear and peak FUD stuff going on. It was bad. And I'm like, it's so strange how they come out of the woodwork like that. It's crazy.
Exactly. You feel there's a price. There's a price. As soon as the price is there, whoops, they're all back, right?
Oh yeah, it's nuts. But then to me, that was a buying signal, because looking at how we were back then, that's when we signaled the bottom, and then it took off again. So I'm like, hey, maybe it'll happen again. So either way, it's one of the things that, and I try to work with people as well. And I'm like, look, I was like, it's going to be out there. You got to fight it. That's just what it is. When you're a company like Tesla, you've got a guy like Elon running the show, you're going to get this. And it's been really hard.
Oh yeah. And they're nasty. I have to say they're really nasty. And out there, helping each other. It's really funny because initially I never blocked anybody. I think I have now over 1,000 people blocked, and it's not that I like blocking people, because I actually like engaging with people and discussing, and they have a different opinion. So what, right? But they're really nasty. There's nothing nice about them, and all they want is just, there you go.
Yeah, they just want to get a reaction, and for me, that's it. It's like a bully reaction. And again, like I said, I have no problems discussing it. I encourage that on my channel all the time. I was like, I have no problems discussing different points of views. I love that. That's what makes us all better. But if you're going to come out here with no backing and support behind it, and you're just going to go beat somebody up like a bully, like, nah, get out of here.
And I feel it's a little bit like with those political news, and I'm not going into whether it's more Republicans or Democrats, but you have the feeling there's always a subject of the day, le sujet du jour, we call it in French, right? Where you have one subject, they just hammer it through. And so the last couple of days on my feed, it was, but all the insiders are selling. I mean, we all know why Elon sold, right? Last year he sold to pay his taxes. He did this poll. He asked, was it clever? No. Was it done the way I would have done it? No. I mean, December was a catastrophe, right? Because of that, but there we go. And then obviously that was the highest point for Tesla. Then in January, the stock caved. Oh, you see, it was insider selling, blah, blah, blah. Then now he sold for Twitter, and there's, you see, all these insiders are selling. They know it's going down, and they just like go on and on and on and on about it.
Oh yeah, and like,
and you can't argue with the people.
No, and I try to explain to people, like, when it comes to Elon, when he sold last year, he put the Twitter poll out there. I'm like, if the SEC allowed him to, he would just say, hey, by the way, everybody, I'm going to be selling some shares, so the stock price is going to come down. But he can't do that. He's not allowed. So
exactly. So you have to do that stupid poll. Exactly.
Right. So he tries to give us hints. We've heard it all the time. I mean, heck, just when we had the annual shareholder meeting, and he's like, hey, anytime you hear these things, it's probably a good time to buy. And sure enough, the next day he had sales going through.
Exactly. That's actually a very good thing. And I try from time to time to do some of those clippings from Elon, because you just have to listen to him. I mean, he explains what he's doing. I don't think he's really malicious in trying to put something out when he thinks something else. I think he's really just telling us what he's trying to do. Sometimes it may sound naive, or sometimes it may sound too simple, but you can usually trust him. That's what he wants to do. Nothing more complicated behind it.
Right. He said himself, with him, you don't have to read between the lines. You just have to read the lines. That's it. And he pretty much tells us.
And that was a debate actually I had. Yeah, sorry to interrupt you. That's a debate I had on Monday with Gary and Ross, because he clearly said Twitter for him is not about profits. This is not a good financial investment. This is because it's a bigger cause, right? Now, when I say that to Gary and Ross, they go like, of course he wants to make money. He's going to, maybe it will make money. And I hope it does make money for the people that co-invest with him. But I'm sincerely convinced that for Elon, that is the last thing he thinks about in this whole Twitter story.
Yeah, exactly. And like, he does what he feels is best for the world. And, he knows how his actions are going to affect other people, especially investors. So that's when he gives us those little hints and says, by the way, I'm doing this. This is probably how it's going to affect you. Just letting you know, but he can't just come out and say it because he's not allowed to.
Exactly. And I mean, and for people who can't stomach that, which I can understand, I mean, I fully understand that this is not the stock for everybody. Well, then at least don't do margin, don't do options. That's just I'm saying it all the time because I get all these DMs saying, oh my God, I did this and this. What now, Alexandra? First of all, I can't answer. I have no idea. And second, the only good advice I can give, if you can't stomach this volatility, don't go into margin with Tesla. Don't go into options.
Yeah, and I tell people all the time, if it's the same thing and you like Tesla as a company, what's your time horizon? If you're looking 5-10 years out, put the money in and just dollar cost average and ignore it. Ignore everything. Don't look at your 401k. Don't look at your portfolio. Just let it go. And you'll look back in 10 years and be grateful that you were doing that. And so now looking.
So what's your thought? Sorry, what's your thought, Tim? Do you think he will, once he gets Twitter, which I think he will, do you think he will actually operate it, or he will put a CEO there?
I think he's gonna put a CEO there. I believe a while back he said, he'll probably be CEO for like 6 months until, he just kind of gets the ball rolling and gets the foundation set. And then he'll put somebody else in place, because I think for him, that's the most logical thing to do anyway, is to put somebody else there, and he'll just be a driver behind it. And I was thinking about it the other day. What are the positives behind this? Obviously, we hear so much FUD about it, so much negativity. Is Elon going to have to sell? It's such near-term stuff that's going on that we're going to forget about this within a year now, and the financials aren't going to matter. But long-term, how do you think this is actually going to affect Tesla? Do you think that maybe he's going to incorporate this now X Everything app into Teslas and kind of incorporate the two together?
Well, I mean, having the app or the App Store or whatever comes with it linked to the Tesla, of course. I mean, why would he, let's say Twitter is now completely run by him. Why would he have Facebook in the Tesla, right? When he could have the Twitter feed in the Teslas. But I don't think he will add any of that business, DX business, to Tesla. I mean, I think it's also already a huge present for us that he's putting the bots in Tesla, right? There was no obligation for him to do so, and he is, which is a huge present to us Tesla stockholders, because now we have all the benefit of that. I don't think any of the social media or anything will have to do legally as an entity something with Tesla. And I do believe X or Twitter or whatever it's going to be called in the future, because I hope it changes the name, will be the way we see today. We'll be on it even more, and we'll do even more things on it, not only communicate. I think there's going to be, I don't think we'll do it on StreamYard. I think we'll actually do it on Twitter in a couple of months.
Oh, yeah. Yeah, I mean, like you said, he's going to make it very much like WeChat over in China, where it's, it literally is everything. And, and then,
have you ever looked into WeChat? Because do we have any videos how that works? I was really interested in, seeing how many functions it has. I saw a couple of charts, but I never saw the app in action.
I have not. That's actually a good thing. I will definitely look into that, because I have not seen how it works. But, obviously Elon being over there with China, he's very familiar with it. Sounds like it is a very, very good, solid app. And, and of course, Gary argues, he should have just started his own. But, thinking about the user base that will end up coming over, I think that's the accelerant that Elon is talking about. The fact that even if he starts his own platform, obviously very popular guy, 100 million followers, which probably 50 million of which are bots. But, he can come over, and bring a significant chunk. But I'm sure most of those people are, Tesla fans anyway. There's a lot more people on Twitter than from the Teslaverse. So being able to take Twitter itself just brings that huge user base with it to start. And I think that's the accelerant he's talking about.
Yeah, and I saw a good comment, I don't remember who it was this morning, about that. It said all the celebrities are already on Twitter. Until you have all the celebrities on another platform, especially if it's suddenly so, biased, because we all love Tesla and we all love Elon, but how many people don't, right? I think it's just much better to leave it in this house and make sure that the users stay, have a good experience, and get so many other features that they don't even think about it and spend so much time. And that's another point I actually disagreed with Gary yesterday. Him saying that Americans like to have their apps segregated, right? Facebook for the family and Instagram for the nice pictures and whatever. I don't think so. I think it's just, that's the way it is today. I don't think it's, I don't think anybody ever woke up in the morning and said, oh, I love having my app segregated. I mean, it never came to my mind. Did it come in? Right? And I mean, if something would exist that brings it all together, you would probably think it's natural that that's the way it is. So I have never seen an American tell me, oh, I love my app segregated. That was...
No, and honestly, I'm a guy who's pretty efficient. I like to consolidate things. So I would love to have them all in one place. So for me, I'm looking forward to what he's going to bring to this. And we know he's going to take it private anyway. So we'll see what's going to happen. And of course, we still don't know for sure. And we still know for sure. I mean, Twitter, that looks like the last...
I think it's quite likely now, right? Don't you think there's still a big doubt on it?
No. So, I mean, just before we got on here, I saw that I guess the judge pushed it off until October 28th now. So both parties agreed. So it's been pushed off. And so now we're going to wait on that. So, I think right now it's, for lack of a better term, it's a pissing match at the moment right now between the two of them, trying to decide what they're going to do. Like, I want you to buy it, but I don't want you to buy it. And it's like, stop this tug of war childish match and just make it happen.
Yeah, because I mean, Twitter everybody always talks about what Elon has to lose, but Twitter has to lose a lot as well. If this deal doesn't go through, they're not worth $54.20. Everybody knows it, right? So the people, the management, the employees that are still there and have the stock option, that was a good point actually from Ross, saying, well, they're all waiting now for their stock options to go up. Well, yes, of course. If you suddenly get $54.20 and then you can leave the next day with your 401k and roll it into a what is it called? Backdoor IRA?
That's a sweet retirement right there.
Yeah, exactly. There you go. Don't need to worry about Elon anymore, right? You can actually buy Tesla stock with it after that.
It's funny. Like, I've got one of my subscribers. He works for legacy automotive maker. So he takes his paychecks and puts it right in a Tesla. So like literally legacy
Oh my
auto
gosh.
is investing in Tesla through him.
Right.
I'm like, that is awesome.
Not only the credits, but also that's funny.
Let me see. Let me see if we've got any questions in here. Lots
Any
of
more
comments.
questions? Yeah, let
Yeah,
me.
you guys have been
While I
awesome
still have a
today.
voice.
Let's see here. So many. Isn't Elon taking Twitter private? Yes, he is taking Twitter private. That's what he said. So I have no doubt that's going to be going private.
I saw. I mean, I don't know whether that's the most updated. So there's 7 banks doing the lending in the Twitter deal, right? So I think the last little window of getting out of it could be if any of those 7 banks suddenly pretend they can't lend the money anymore, but it's not so easy. Is that the consensus now?
Yes. So from what I had gathered from all the information I had seen, seems like the banks right now, the agreement that they made to loan the money, they're cemented in this. They cannot back out. There's no choice. So obviously we heard from Apollo and Six the other day that, they weren't going to get into it, but they hadn't put money in yet. They were just in talks to invest some more. So I know Gary did the math. It looks like it's just over $5 billion that Elon would have to come up with, whether it's from other financial backers or himself to, and selling the stock to get there to make the rest of this actually happen. So, but right now, the banks that are included in this, it sounds like they cannot get out unless there's some sort of financial obligation that can force them to get out of this. There's no way they can get out. And if they do end up getting out of this, then Elon can pay the $1 billion to stop the deal. But he cannot pay that as long as he has the financial backers.
Okay, but so the worst case scenario is that he would still have to sell for 5 billion Tesla shares, which is a chunk,
I think worst case scenario,
not going to go down nicely.
Right, but it's at the same time, in the grand scheme of things from what he's done before, it's like a half a blip on the radar. Like one of those days where he sold previously, it'll be like half of that, and that'd be it. So it'd be relatively quick.
And he can't anyway now because of the financials, right? So there's this window still that currently he can't do it.
Right. So unless he had filed for I believe it's the 10b5-1 prior to September 16th, he would not be able to do it. So just like Zach Kirkhorn did it, so he couldn't do that.
Yeah. Okay.
So
perfect.
Brian over here, what kind of shift might this upgrade have over the course of a year? 1% more demand, 5% more?
Oh, no, more. I think the institutional shift will be quite significant. I'm actually currently debating, and it's been going on for 2 weeks with Guru Focus. You have to understand this data business, who is holding what stock, is in the hand of very few. And the data on which funds or which institutional investors hold Tesla stock is obviously derived from SEC filings and then repurposed and given to these website type Guru Focus. Guru Focus is the one I'm using, but there are a couple of them. And then Yahoo Finance publishes some of it, but not a lot. But Guru Focus you can really dive into a lot. Why do I insist on that? Because so it's Morningstar assembling the data and then selling it to these various websites, financial websites, and they screwed up the split. So you have reliable end of June data, but you have nothing reliable since. For some, they divided the price but didn't multiply the shares. I mean, it's going all over the place. So at the moment, there is a big doubt out there whether currently it's 20 or 25 or 40% institutionals in Tesla. You cannot find anybody who can give you a definite answer. I've been after that answer for the last 2-3 weeks. I'm writing to them. They're starting correcting. It gets a little bit better, but we're still not there. So, but whatever it is, it will exceed 50%. There is no doubt. So I don't know what the base is now. Are we at 20? Are we at 25? Are we already at 40? I can't tell you because nobody seems to know it and nobody seems to really do the numbers. We will certainly have better numbers once the September numbers are out because those are quarterly numbers. They are prepared in a much more reliable way, but that will still take a couple of weeks. But up to that moment, we don't know, right? And then once we have end of September numbers, that will be our base. And then we will compare it with end of December and end of March. And I do believe there will be at least 10, if not 20% more institutional buyers by then.
Yeah, and I know Gary had mentioned before, and I was just looking on TD Ameritrade. Looks like around that 43 to 44% institutional investor on it right now. But like you
That
said,
was end of June.
yeah, like you said,
Yeah, that was end
that's
of
old
June.
data. So
Exactly.
who
That's
knows
end of
now?
June. That's the number we had on Yahoo Finance as well. And that, at that moment, Guru Focus was still correct. At the moment, Guru Focus is all over the place. I was actually yelling at them yesterday. They know me now by first name.
Oh, it's Alexandra again. We recognize her phone number.
Exactly. There she comes again. I hate it when the numbers are not good. I mean, we're paying $500 to have a good service and then do it, right? Oh, yeah, it's a data provider. Fair enough, it's the data provider. Yeah, let the data. Give me the number of the data provider. I can yell
Yeah.
at them.
And now thinking about though, from the end of June to now, do you think it really would have moved that much? We haven't had that much with financial fundamentals that have changed. Do you think we'd have that much
Oh,
more?
yes. Yeah. The Fed raised rates. I mean, I do believe there was a big
Okay.
shift from stock to bonds, right? And that
Right.
is all stock. So when huge portfolios change, they then sell proportionately all the stock. They don't sell one stock in particular, but let's say they move from 40% equity down to 20%. Well, then they half for each equity holding they half it and switch it to bond. So you could have that. You could have that it's lower, but I just can't tell you what it is because none of those numbers out there are reliable. Let me see whether I can pull it up because I should have actually that page open because, like I said, I was screaming with them yesterday.
And and that makes sense. And I don't know, and you can tell me because I don't know how it relates, but just I've been following the volume of shares per day, and it was usually around 26 million per day prior to the split. So afterwards, you would think we'd be around that 75 to 80 million. We've been significantly lower than that. Would that be affected by the fact that there's less institutional buyers in there?
Exactly.
Okay.
Exactly. That is it. That is it.
Okay.
Let me
That makes
see
a lot
whether
of
I
sense. And so
can.
then based upon those numbers, I would say we are significantly lower than 44%.
Exactly. So let me show where I was with them yesterday. And again, I mean, I didn't leave them as a happy chap. Let me see how I can open that page. Duck. Where is Guru? Here it is. Sorry for me being so. And can you see the Guru focus there?
I cannot, and I honestly. Oh wait. Whoop! I learned how to do it. You just taught me something new. That's awesome.
Do you see that? Because I don't see you anymore, right? But if you tell me you see this black and white page, then I
see it.
can.
If you guys can confirm that you can see it, I can see it.
Okay, perfect. So this is Guru Focus on, which is a really good website, costs $500 a year. I'm not making any referrals or whatsoever, but it's just they're assembling a lot of data from a lot of different sources to bring it together, and that's what helped me do those very good tables that got us into the rating subjects. So here we are on the ownership, and you see straight away they pretend that Tesla's insider ownership is only 0.06%, which is obviously crap because Elon holds 16%, right? So this is impossible.
But
This
now,
number is already completely wrong.
is he considered a retail investor though? I mean, I would obviously he's got
Well,
a.
well, I mean, it doesn't make sense. That's why I told him yesterday. If I go on the
Yeah.
insider thing, that data they get from somewhere else, and here you see insiders buying and selling. So here they tell me Elon is included.
Okay. All right.
And you see his share count and everything. But on the other one, it's not. So I mean, obviously, I told him that doesn't make any sense. But anyway, that's that. But before we get into that one, this graph is a graph that I had done end of June and you had seen on my feed, but it looked completely different because it didn't have this spike here. This one didn't look like that because obviously, and this is the share count. Now, why is this green line so wrong? Well, that is because the split adjustment wasn't done correctly, right? So we have numbers jumping around here from 17% institutional ownership end of June, which is wrong. That should have been 40%, and going down now to 28. Now, maybe the 28 is right. I can't tell you because now the stock split is consumed, but then the old stuff is wrong. So anyway, so I was, like I said, screaming with them yesterday. So they went back to Morningstar and are trying to solve this. So as soon as I have these graphs in good state again, I will share them again.
Awesome. No, that is
Now,
awesome
am I
information.
back?
Yeah. Oh yeah, you're back.
Yeah.
So I was wondering why the volume was so low. Like I know that usually in August volume is lower anyway, but then I was like, we got to September
Sure.
and it never came back up, and I just could not figure out why. So now we
Oh,
know
they're
why.
in
And that's
treasury
awesome.
bonds now. I
Yeah,
mean, if you get for a 2-year treasury bond suddenly 4%, why would you stay in a so volatile stock environment, right? So they're
right.
currently pulling out money not only from Tesla but from stocks back into bonds.
Oh yeah, yeah, and that's why and of course when we have a lower volume, there's higher volatility anyway, which is why we see
Exactly.
it going all over the place. So this could just be that downward lull. And now as soon as institutions start buying back in, now that we're investment grade, and obviously the
Yeah,
entire market's got to turn, when the Fed starts, slowing down with the rate hikes, we'll see that turnaround as
that's
well.
exactly it.
Yeah.
Yeah,
Awesome. Let's see if we've got anything else in here.
good.
My God, this has been awesome. Thank you. So much great information you share with us. Um, mm, mm, mm. Yeah, and that's one of the things that oh yeah, so I'd had it before. I know we discussed it a little bit earlier. So the fact that the stock price didn't move at all today is just because there's so much other stuff going on out there. This is gonna be
Oh,
more of a long drawn out build than just an immediate excitement like when we got the S&P inclusion.
yeah.
Do you think we're gonna
No,
get included
the
into the
good news is
Dow?
it's done. Sorry, I didn't hear you.
Do you think we're gonna get included into the Dow anytime soon?
I don't think the Dow has any significance anymore. I don't even know whether there are so many funds anymore that are tracking the Dow. I don't expect anything coming out from the Dow. I mean, honestly, of course, Tesla will be in the Dow sooner or later,
Right.
the same way Apple is in there. But I don't think that'll have any consequence.
Yeah, and I know from what I gather, the last automotive maker that was in the Dow was GM prior to the 2008 crash when they had to, get bailed out.
Mhm.
Um,
And that was that.
Let me see. Can either of you comment on Credit Suisse? Go ahead.
Well, I mean, I did a little bit this weekend because obviously they're still investment grade, right? There are two entities in Credit Suisse. So there's the Credit Suisse Group AG, which is the holding it all, which is triple B rated now, like Tesla. And then you have certain investment firm entities, the German one, the Swiss one, the American one, that are rated single A because they're very clever in using those streamlined little entities for better balance sheets and that yet better ratings as counterparts for all their financial doings. Now they're obviously trying to sell stuff. I heard they're selling a hotel chain. They're trying to get new investors in. They're even trying to talk about spinning off. I don't expect Credit Suisse having a Bernstein or a Lehman scenario. I just think we've learned hopefully enough 14 years ago. But it is not impossible. Now, the problem, obviously, of Credit Suisse is they're Swiss, they're European because they have a strong presence also in London and in Frankfurt, and they're also obviously American. So it affects everybody. It's not when it happened to Lehman, it was a New York story, right? I mean, obviously spread out due to their contractual obligations to a lot of other entities. Credit Suisse is even much further, right? The entanglement of Credit Suisse is really much more economic than Lehman's was. So I do believe it's too big to fail. And they will work it out. I'm sure there are a lot of people sweating a lot now and not working only 8 hours a day to get this situation solved. And they're going to sell the jewelry, and there will probably be a downgrade. But I do believe this is going to be solved.
Yeah, and I know that was a question that I'd heard the other day, like who's going to be the next Lehman Brothers, and this now popping up.
And there are lots of them. I mean, Deutsche Bank is also in an uncomfortable situation. There are a couple of other German banks that are in uncomfortable situations. And I mean, the economy in Europe is much worse off than the economy in America. It seems always difficult for us to understand. It's a political mess in Europe. It's obviously an energy mess in Europe. There's this war going on in the center of Europe. So there are lots of things happening in Europe that don't help these banks.
Yeah, and I know there's a lot of talk about people concerned about that situation is going to end up carrying over here to the US. Do you think it's going to end up being that bad here in the US also?
Actually, I think the US is profiting from it all. First of all, the US is selling energy at high prices to the Europeans. Second, the US dollar is very strong, has never been stronger than now. I think the United States have a strong influence in Ukraine, which they always wanted, and so now they have it. Whether it's the right strategy, I don't have a geopolitical opinion about it, but it is obviously strong. So I actually think the American economy and the American influence is benefiting from the weakness of Europe.
Well, that's good to know. And I know, I mean, in my lifetime, I've never seen the pound be worth less than the dollar. You have a
but the UK is in a real mess.
Right.
The UK
and of course they just got bailed out recently.
Exactly, and I mean that whole guild story was ridiculous, which actually shows, and that's true for a lot of economies, including the American ones. These repos, that's a shenanigan. What they're doing is they're over leveraging short liquidity windows, right? They're giving securities to be able to lend money from the central banks, which they then pour into the market. So this is just a constant over leveraging of what the state doesn't have. And in the UK, it became evident just because of that very sudden tax discussion, right? Getting rid of the highest tax bracket, and then just everything fell apart like a house of cards. But it's very fragile. I mean, all our economies are built on too much debt, and nobody's ever addressing it. We're just getting used to it, and then building up more debt, and getting used to it, and building up more debt, and whatever. And that is the big problem of it all.
Keep raising the ceiling. We're up to 31 trillion here. How high can we go? It's unbelievable that they can do this. And like you said, like as a wise investor or somebody who's trying to, get yourself out of debt, you stop the spending or you don't go into margin. And that's the complete opposite of what these governments are doing. It boggles my mind.
They are. And it's our money.
Oh, I know.
And it's our money.
And what's so easy to do with somebody else's money.
It's true.
Let me see if there's any other questions. I didn't even check.
Well, if we don't, I wouldn't mind seeing the SpaceX launch again. But I mean, I stay with you if we have more questions. There's no problem.
No, that's fine. Well, we'll check it quick because I want to be respectful of your time as well. We've been on for an hour now, and this is awesome. Thank you so much for this. Let me see. And we won't get into political stuff. We'll do that. Space launch. You know what, everybody? I know a lot of you guys want to go watch the SpaceX launch, so we will go and do this. Alexandra, thank you so much for everything you have done. Thank you for being on the channel today. Cannot wait to see what else we have in the future, and we're looking forward to the ESG stuff too. That's the next big step.
Oh my gosh, next one uphill. You all take care. Okay.
Awesome. Thank you, Alexandra. Thank you, everyone.
Take care. Bye-bye.